like it didn't happen. Record it and say, okay, this is what my observation was. I expected this to happen and it didn't pan out. So that's an opportunity for you to see what you read wrong or what you omitted in your observation because you missed something. It's always error on the operator. When I do it wrong, it's me that did it wrong. It's me. I did it wrong. And that's personal responsibility. And you have to have that and you have to develop that in the beginning. And don't be afraid of it. You have to 100% own everything about what you're doing. There's no team effort here in trading. So you see how we came down. Look at the bodies here. I mentioned how once we got out of this with this candlesticks close, this became an inversion. And the bodies, they can come back down here, but they have to stay above the midpoint. You see that? See how it behaved? That in and of itself, from here to the low of that right there is a small little micro market structure trade idea that you can explore on a 15-second, 30-second chart. That right there can be a model. And you don't even need it to go to where we were expecting it to go to. That's that's the part of you bringing your own personality and the level of your understanding in play so that way you aren't forcing the best outcome just because you think it might go there and you're trying to learn how to do this and you're learning how to read the tape and be comfortable doing it and enjoying it. Don't feel like you have to create these Olympic level feats of outcome where it works perfectly in your favor. You don't do anything wrong, none of that stuff. You want it to be fun. That's the most important thing. You want it to be fun, but not a sugar rush where you're constantly like hopped up on goofballs. You just want to relax, enjoy it. It was profitable for you to observe price action, even if it doesn't do what you wanted to do. And it's fun. It's many times I attribute it to like a form of meditation. If you just allow all your problems to leave you for a little while and just pour your focus into these candlesticks, you know what you can't do? You can't stress about your bills not being paid. You can't stress about all the problems in your relationship. You can't stress about the job that you hate because if all your attention's right here, you can't be permitted to focus on those other things. So you're doing two things. You're building your experience by reading price action, and that in itself is going to be a huge advantage over folks that don't want to do these types of things. They want to get in here and push buttons and make money. And the statistics prove that they lose money doing those types of things. So, as an educator, as a teacher, I try to cultivate that in your mind as a developing student so that way you're not fixated on trying to chase money. You're trying to chase excellence. Excellence and execution, baby. That's what we're trying to do. And in the beginning, you won't have that, but you're going to do things and practice things to get to that degree. And it's going to come on the right time. It will not be late, but it won't come as soon as you want it to. And you have to subscribe to that's how it's going to be. And you can't speed it up. So that's submission to time. And that's not weakness. That's maturity. That's you managing yourself in an environment that you have no control of the outcome. And that's what trading is. You don't know what the outcome of that trade is going to be, whether you're doing it with a paper trade, demo account, funded account, evaluation, real account money, live button. You can't control the outcome. The only thing you can control is how you're going to engage it, how much you're going to risk, how long you're going to stay in the trade, what you're aiming for. How often are you going to take another setup after that? It's just the way it is. That you are the only thing that you can control, and you learn how to operate in indifference in that environment by tape reading, where you condition yourself, where you're looking at certain things happen and you're not needing it to be perfect. And you're identifying it didn't do exactly like I wanted it to, but it still did it because I waited for it to happen. And I'm taking in new information, I'm taking in new experience. That new experience needs to be logged in your journal. And you got to be honest with yourself, but not critical where you hurt your feelings by saying, I did this wrong. This stuff's probably never going to work in my own hands. If you do those types of things, the only thing you're doing is anchoring toxicity to the progress. And you cannot enjoy that. No one can. It's impossible to enjoy that. So if you're not going to enjoy it, if you're not going to be relaxed, because that's what you're doing. You're teaching yourself how to be relaxed in a state of indifference, so that way the outcome, it doesn't have to win for you. It doesn't have to, because over time you'll see that the things that you're exploring in price action, they're going to yield more often than they'll fail. But you're comfortable accepting the times when you do it wrong and it fails. And it's a hard lesson to teach. It's very difficult to teach that, but it's a lesson that everybody has to learn, or you will not be successful. Hmm. All right. So far we got the bodies that came down here. They didn't touch the consequent encroachment of the inversion fair value gap. We had a nice little push above. We took out that short term high here and trade up into this area here. The bodies have not touched up there, so that's a point of concern at the moment. But we're inside of the order block that's here. Why is it the open of that? Because this candlestick's larger and more protracted than this one. Okay. Overall, this is all one portion of an order block, but that right there, that price, that's the change in the state of delivery. And we're returning back into the inversion fair value gap and this big down close candle also. So there's several things in here. This is the type of price action you would expect on a morning ahead of FOMC. So you want to observe all these types of things. There's a whole lot of skittishness. It's like a reluctance to do something. It'll do things that are unexpected. You may think that it should perform a certain way, but then it doesn't, or you expect it to run and it doesn't, just stay stagnant. That's the characteristic of this morning every single time FOMC happens. So what it'll communicate to you is when you don't risk real money, and if you observe price action and it doesn't yield to you as you would expect, that's a reward. That's a reward for you saying, I'm not going to participate in something when I know the probabilities are so against me. But for the sake of experience and experience only, I'll engage price, I'll watch it and see what it does. And when it does, say it pans out like you want it to, you don't get so sugar rushed and think that you're smarter than everybody else, and that means next time you see FOMC, you're going to trade with real money. That's not what we're trying to encourage here. So from here to there, as I was talking about, that could be your model. By itself, that little price run, some of you might think that that's not enough for me. Well, if you're brand new and you can find these types of price runs like that, and that's all you can do, you're outperforming everybody else, because 90% of people that trade don't make money in retail. Now, think about what I just said. 90% of retail traders lose money, but because it's a net sum zero game, for every winner, there's a loser. So the retail traders that lose are doing something.
I had 7 pension funds from previous workplaces. I was able to transfer those into one simple plan.
When your pension is in a good place, you're in a good place. Pension Bee.
So see, right now we have 930's candle pretty much just hemming and hawing back and forth in here. They have left the buy side here. They went up into this inefficiency. Wonderful. The bodies couldn't even get to consequent encroachment. So it would need to really have a strong showing out of the upper half of this to make a run above here. If it can do it, if it can do it, I would be interested in seeing how much of an interest does it have to get above there. Where it is right now, it becomes less likely if we take out that low on a closing basis. So if this candlestick goes down or anyone after that without taking these highs out, that low becomes more likely to be swept. And I can see already there's people out there thinking, look at this guy. He's calling both sides of the marketplace. I told you I don't have a bias. The only thing I will be interested in is seeing it run where it's smooth. I would not be interested in being short. Let's put it that way. And it can drop and it would be nothing to me. I wouldn't care. But what I'm looking for is something to justify a run up into these levels as I've indicated. One of the most difficult things as an educator is encountering people that believe they know how they should be taught when they have zero understanding about the subject matter they're engaging in or delving into. It's somebody that's not teachable. When I was doing paid mentorship, I had a lot of those types of people come through, and it was so draining. You couldn't pay me enough. Like literally, you couldn't pay me enough money to ever do a paid mentorship again. It just would never happen ever. All right. So we're inside that 50-50 or 50-50 margin where it's going to have to go right now or it's not going to go, meaning that we're in the upper half of that SIBI here.